Well, homebuilders had a better month than expected in September, with U.S. housing starts rising by 6.5%. That's the second highest level in 8 years.
And helping to fuel this gain, new multifamily homes like apartments, which rose 18%. For more perspective, we're joined now by Hessam Nadji. He is Senior Executive Vice President at the real estate sales and investment firm Marcus & Millichap. Hessam, welcome to Bloomberg Market Day. Thanks for speaking with us today.
Good morning. Thanks for having me on the program.
So housing starts rising more than anticipated in the month of September, yet at the same time, building permits unexpectedly declined 5%. How do you reconcile the two?
Well, on the construction side, it's actually a good illustration of more confidence in the economy. The consumer side of the economy has recovered very nicely over the past few years. And you have to also keep in mind that the numbers we're seeing on housing construction in general, particularly single family, are 60% below the prior peak. So we're not even close to overbuilding the single family side of the housing market. Demand is coming back with improved household formation, which is tied to job growth. On the multifamily side, the numbers are quite high, historically speaking, but there's so much demand for multifamily rentals. Whether it's the young adults that are now moving out and renting units, whether it's the older baby boomers that are now beginning to move into apartments instead of owning an empty nester home, demand is coming from all directions. And the apartment market is incredibly strong, and the occupancies are showing that strength. So the kind of construction that we're seeing is very much in line with the demand on both the single family and the multifamily side.
We actually pulled up a chart about single family construction versus rising household growth, which sort of goes to speak to the fact that we're getting wealthier, but we're not necessarily constructing the houses with which to go buy. When does that flip? I mean, when do we turn from renters to buyers again?
I'm not sure if there's going to be a big shift. I think there is a preference to rent that is generationally different this time around, in that you have the urbanization of America with a lot of multifamily construction being concentrated in urban areas, and then you have smaller homes being built, in that the new sort of pattern of consumer demands are very different than 20 or 30 years ago. What we are seeing, though, is that the balancing act between the demand side on the household formation, as you mentioned, is looking very good with the supply side. So the builders are not really getting ahead of themselves. That also reflects maybe your comment about the permit activity pulling back a little bit. We had some headline issues in the third quarter with the stock market going down and so on. Some anticipation of interest rate increases going into 2016. Those things do weigh on consumers and builders. So the pullback is a little bit of a reaction to that.
I want to go back to what you were saying about rental and demand for rentals. Is there a structural shift taking place in that we are becoming more like Germany, a nation of renters as opposed to a nation of homeowners?
I think there has been a structural change. If you look at the home ownership rate, it's gone from 69% down to 63%. Of course, the 69% was really an unsustainable aberration. And I do believe it's structural. That doesn't mean there won't be periods of time when, as interest rates rise or as job growth continues to improve, a number of young adults or a number of people decide, gee, maybe now is the best time to get into the housing market. We'll see waves of home buying. Right now, home sales that are accounted for by first-time buyers are averaging around 30% versus a long-term average of around 40%. We're going to have periods where that number will spike, but I do believe that there has been a structural change toward preference of renting.
And part of that obviously has to do with millennials. Zillow had a really cool report out last week that highlighted a region in California, Riverside, and basically said there's so much more renting going on in Riverside than actual buying. And you can see here in the chart there, about 12.6% are a number of households that they could see the potential increase, meaning that you're renting so much at some point, you gotta buy.
That is true, and I think that goes back to my comment of waves of home buying. But I think given the experience we had in the early to mid-2000s with the housing crisis and the number of people that got burned from looking at their house as an investment, I think those memories are still fresh. And I think the young generation coming through, the millennials, want to be flexible. They want to be able to chase jobs. The economy is really churning. You have all kinds of different jobs being formed in different metros. So the flexibility of being able to move and chase those jobs becomes becomes more and more important. And I think housing is being viewed as much less of an investment. One of the other things that is very important, I think, from a broader economic perspective is that today housing is contributing something like 3.1% to overall GDP growth. The long-term average is around 4.1%. We still have a long way to go for housing to do its usual contribution on a long-term average basis to economic output. That tells us there's still legs in this recovery, and that gradual increase of output contribution from housing actually bodes really well for the economic output.
One last question, very quickly, Hessam.
Sure.
You mentioned that prices for multifamily apartments are 33% higher than in 2007. So at what point do you worry about a bubble in the rental market?
The apartment investment market has been white hot, as you just mentioned with the statistics. What's really important, though, is that fundamentals have also followed the pricing. So if you look at the effective rents, basically the net rents that apartments are generating, they're up about 25% above the prior peak as well. So prices didn't just go up without the accompanying rent growth. And given the low interest rates that we've benefited from over the past few years, investors are still looking at the yield of apartments, being able to lock in their interest rate, and really count on the fact that this renter demand is so strong, you're probably not going to see a major overbuilding going on. There are pockets of overbuilding going on. I want to be clear about that. But as a whole, for the industry, the equation between yield and price and effective rents is still looking very favorable.
All right, thank you so much, Hessam Nadji, Senior Executive Vice President at Marcus & Millichap. Thanks.